Nvidia blew out earnings, and its stock rose and then fell. Is circular financing finally catching up to Nvidia? Is the stock market predicting peace in Ukraine? Are President Trump's proposed $2,000 tariff dividend checks a good idea? Why is the US dollar falling? And three stocks to watch, all on this edition of the Curia Investment Show. As usual, I am joined by two fantastic guests, Simon Erickson of Seven Investing and Eoin Treacy of Treacy Money. Guys, welcome again.
Hey, James. Happy Friday.
Thank you. Thank you. And I'm going to try to keep my jokes a little better this time. I wasn't sure last time if I should apologize to my son or the mailman or both, but I just figured, well, let me just put myself back on the straight and narrow. And we're going to try that today. So fun fact, this is a little bit not investing related, but who cares? What percent of Americans do you guys think claim that they have seen a UFO? Any guesses?
5. I'd say 25%.
You know, it's at 18% per a March of 2024 YouGov poll. It's a lot higher. That's roughly 1 in every 5 people thinks they've seen a UFO. And who am I to judge? But, it is what it is. Also,
well,
random fun fact. Pardon, Owen?
The truth is out there.
Yeah, the truth is out there. Speaking of truth, random fact. I sent a segment of the show to my dad about a month ago, expecting some comment, thought he is an investor, thought he might be interested. Replied, though, no comment about the topic, about anything about the show. It's just, you look like a used car salesman in that jacket. So here I am with my used car salesman jacket. I will not show this segment to my dad. But let's talk about Nvidia earnings. Now, revenue for Nvidia Q3 of 2025 reached $57 billion. That was above analyst estimates of $54.92 billion and a 62-point jump year over year. Fantastic results overall. Everything was good. Jensen, in terms of broad numbers, Jensen Huang said the sales of the company's next generation Blackwell chips were just fantastic, off the charts, I think was his word, sold out, blah, blah, blah. But the stock did something really weird. It was up 5% after hours after the announcement, and then it went down. So, Simon, what is your read on this?
My read on this is the numbers were fantastic, James. It's fantastic enough that you get 62% top line growth. But let's keep reading the rest of the announcement too. 73% gross margin, 63% operating margin, 59% net margin. I mean, this is not only a company that is getting sales and doing deals, but is capturing the entire value chain of the semiconductor industry, making a ton of profits off its best-in-class computing processors out there. I thought it was even more impressive, James, that they issued fourth quarter guidance of $65 billion. That would represent 85% year-over-year growth. Why is it accelerating? Well, because data centers are transitioning to NVIDIA's newest Blackwell chips, the latest and greatest GPUs that's putting it out there. By the way, all of this is backward looking. We're not even including the 10 gigawatts of capacity that they've signed and in a partnership here with OpenAI. We're not even considering a lot of the new build-outs that are going to continue to use NVIDIA's chips. It's hard to look at this earnings release and be nothing other than impressed. It was fantastic all across the board.
If so, and if the U.S. economy seems like it's on track to we're basically being one big Nvidia, if this growth rate keeps up, mathematically speaking, why is the stock down?
Because NVIDIA is now 8.5% of the S&P 500 index. It has become such a massive company that it's crazy for our brains to even fathom that it can grow as fast as in a continuous sustainable pace. There's undoubtedly some resistance, some questions about whether NVIDIA can continue to grow at 85% year over year when it's already at $60 billion, that it's doing in a quarter for revenue. It's amazing the scale of numbers here right now. It's kind of, what do you believe? Do you believe that we really are at this inflection point that is going to be necessary for artificial general intelligence, that we're going to have to continue to deploy at the same kind of pace that we've done for data centers out there? If so, buy NVIDIA. There's a lot of growth on the horizon. I think there's a lot of skeptics that are saying it's slowing down and that this is not going to be a sustainable pace. And eventually either the economy is going to slow down or the pace that these companies are spending on their data centers is going to slow down. If that's the case, maybe NVIDIA does not continue to show such amazing blowout quarters like it did here in 3Q.
Oh, and do you have any thoughts? And I say this, I'm going to bring up something that I found on the internet. And as I do that, I want to hear from you, Owen, if you've got I know you've talked to your subscribers about NVIDIA a bit as well.
Sure. Do you want to go first or should I go?
Yeah, you go first. You go first because, I'm slow. I'm going to go fits around here as you're doing this.
All right. Well, the challenge is NVIDIA is doing fantastically well. And if you're a great company, it's great when you do well. It's almost better if your customers also do well, because that creates a sustainability factor that you're going to be able to sell and you have willing buyers that are also doing well from your products. But the problem, and it's something we don't know because there's no two companies are doing their depreciation schedule the same. So how long do these chips last? And once I put all this money into my data center, how often am I going to have to churn that number of chips in there? And if it's 18 months, well, that's going to be super expensive. If it's every 3 years or every 5 years, well, then maybe it's affordable. And if I'm using those chips to build my AI, am I getting the revenue out of the products that I'm producing with that AI to cover the costs of buying all those chips? So one thing that we saw was, yes, Nvidia's earnings were great, but the stocks of its biggest customers, like Microsoft, Amazon, those were going down. So this is, sort of a kind of a back and forth between the leader in the sector that's doing exceptionally well and then the real profit motivation of the companies that are actually buying those chips.
Yeah, my concern with not just NVIDIA, with AI in general, is it's only as good as the credit quality of the customers. It's like the market's drug dealer, and this is overstating it, I know, but there are
Here
people.
we go, James.
Okay, here I'm going off the rails again. Thanks for catching me.
Okay, we're ready.
There are people who there are buyers who can absolutely afford the NVIDIA chips with cash, no problem. But here's an article that I stumbled across. Shanaka Anslim Pereira. Apologize if I'm pronouncing that wrong. I won't go to. I actually haven't dug into every single aspect of this. I don't know how much I agree with or know about because he's saying that the quant models detected something and then sold off NVIDIA, and that's the reason. I don't know for sure that it is, but I did a little bit of my own work, kind of inspired by this guy. Let me bring this up. And when I say my own work, I mean like 2 minutes of cut and paste, kind of circling stuff. He made a good point. I dug into this aspect. NVIDIA is in the upper left. Taiwan Semiconductor is on the upper right, and kind of the lower portion is AMD. These are the cash flow statements of these three companies. For example, Taiwan Semiconductor has operating cash flow that's 106% of net income. Now, without boring everyone, there have been numerous accounting studies that show when a company's cash flows exceed its accrual income, that's a positive sign. Okay, Piotrowski, Richard Sloan, a bunch of these accountants or accounting academics have found that companies that have higher cash flow income relative to accrual income are on a good track, and the reverse is also true. I think Piotrowski found that, actually Sloan was like 19 percentage point per year performance difference in the market. That's probably been partially traded away. Anyway, back to these numbers. AMD, operating cash flow was 174% of net income. But NVIDIA, operating cash flow, that's the cash, is just 74% of accrual income. In other words, if I'm just looking at this, I would say NVIDIA has a substantially lower quality of customer than these, or lower quality of accounting than these other competitors. The NVIDIA business, like the top line is there, but the cash flow is not. Maybe that's why the stock sold off. Maybe. I don't know. It's just a hypothesis. But like if I'm looking at NVIDIA, if I'm looking at AI, I'm seeing a ton of revenue growth. But if people are bending over left, right, and front and back to buy those chips, and maybe sometimes they can't afford them, like, could that be a problem?
James, I'd like to jump in and
Sure.
and share a couple extra thoughts on this because, the market is a complex beast and there are lots of different ways to analyze different companies and even different types of investors. I would argue, though, that you cannot approach NVIDIA as a value investor or even as a too overly fundamental of an investor. You cannot put Nvidia too much under the microscope because that's just not how the stock is going to perform. This is a growth style company that should be treated like a growth style stock. And the reason I bring this up is we had this exact same conversation, not you and I, but a different investor about a year ago when Aswath Damodaran, probably the best financial mind in America, professor at, I believe it's NYU, finance professor, comes out and last summer said Nvidia is egregiously overvalued. It's just completely overpriced. There's no way that's going to grow into these fundamentals. I went back and I looked at it. I became a little bit more bullish than he was. I said last year that the shares were worth $170 a share, which was 30% undervalued. And even that turned out to be too low. They surpassed my aggressive, bullish, optimistic assumptions out there. I'm saying all this because, Jensen Huang and Lisa Su, these are the innovators of our era. These are the CEOs of Nvidia and then also of AMD. And they came out even in 2024, a couple of years ago, and said, look, there's going to be $400 billion of data center chips by the end of 2028. And everyone kind of said, oh, yeah, that's great. They're talking their own shop. That is looking to be surprisingly accurate and on pace with what NVIDIA and AMD's sales are tracking right now. So I think they've earned a lot of credibility. And also it's very difficult to look at these companies in the traditional financial sense and try to say, oh, they're overvalued. Oh, they're not going to support the current valuation. How can they continue the pace they're going? We've been talking about that literally for about a decade, and NVIDIA continues to blow away expectations.
Yeah, I would agree with all of that. Absolutely every single word of that is true. I would say the only little nuance today is we have interest rates, and over the last decade, we did not. And that's a hurdle rate, or what's referred to in the markets as a discount rate. And really what we had this week was not so much fear about NVIDIA. And it really was not about the earnings. The earnings were great. What we had this week really was a lot of discussion about whether there's going to be an interest rate cut in December. And that was the market reaction. It was really more about, are we going to get the interest rate cut, or are they going to just hold pat? Because until yesterday, they were really thinking there wasn't going to be one. And then because the market's pulling back, you have some people at the Fed, Williams in particular, coming out now and saying, well, maybe we might cut, and the market's going back up again. Well, what that tells me is that this is an interest rate play. It's not really about the earnings.
One last thought, if I can conclude with this. The company is going to produce about $100 billion in free cash flow this year after paying all of its expenses, all of its operating expenses, all of its capital expenses, still generating $100 billion. NVIDIA doesn't need that much money. It's going to be interesting to see what they do with that from a capital allocation perspective now that it's gotten as large as it is.
Yep. I hear you guys. I mean, if I'm playing the village skeptic, maybe it's less with NVIDIA, more with AI in general, I would just say, great. I mean, there's no question AI is huge. No question AI is adding a ton of value. No question about those things. But if ultimately the economics for the consumers don't end up being as good as they're expecting, if they're struggling to afford all that they're trying to get with CapEx, or frankly, in another dimension, if the power supply just doesn't exist, I think we have a stock market that bears some risk if those things don't materialize in as quite the rosy future that's being priced in right now. So, all right, speaking of rosy futures, sorry to be a wet blanket, that's just my view. It might be wrong. The skeptical view, Simon, as you've mentioned, has been incorrect. I hope that's not alcohol you're swilling.
It's an energy drink. I'm just getting warmed up. This is myself. We're having a serious debate here, James. It's always more fun when we have back and forth conflict about this rather than us all nodding and agreeing with each other. I appreciate the bear perspective too.
Totally. As my dog is trying to claw her way out of my studio. You can't see it, but she's there.
She's had enough.
Okay, so in happier news, sort of, President Trump is mentioning this plan to pay checks of at least $2,000 per person. That sounds nice, Simon. I know you wanted to talk about this first. Is that a true economic? First of all, we have to talk about whether or not going to happen, but even if it would happen, is that a true economic booster, or is this like a misguided PR scheme?
It's a misguided PR scheme. It's a rebate for an upcharge, right? Here in America, our policy is to put blanket tariffs across all countries across the entire world, which is increasing the cost of goods that are imported, right? And so naturally, drives the prices of things up. And when people are on a relatively fixed income that they're bringing in every year, what do? You buy less stuff. And so then you look at it, the economy starts slowing down. You start looking at the GDP numbers and say, we got to stimulate the economy. Let's give everybody more money that we raised from the tariffs to go out and spend more to stimulate the economy. It's almost COVID part 2, but this one is not related to an outbreak of an epidemic. I don't like it, James. I don't see that this is really beneficial. I mean, I think a lot of people would love to get a $2,000 check from the government right now, but it's really just kind of hidden in the fact that the prices of everything we're buying is just going up because of the tariffs in the first place.
Yeah, I mean, I'll just, Owen, you seem like a guy who's got an opinion on this, but just to share a few numbers that I was looking at quickly. Oh, first of all, let's recall the Supreme Court could still negate the tariffs anyway, and there's some chance that this money would have to be refunded, in which case, there it goes. Roughly $120 billion has been collected, incremental tariff money, for the tax foundation for these new Trump tariffs. But the U.S. has $38 trillion in national debt and about a $1.8 trillion yearly deficit, which, to be fair, fell 24%. And after starting in August, after President Trump's tariffs took effect in terms of run rate, Polymarket prediction market says there's an 11% chance these $2,000 checks will be paid. 11% is not too high. And again, the math: $120 billion in tariff money collected. But if you gave everyone making $100,000 or less in income one of these checks, you'd pay out $280 billion per the tax foundation. So the payout is far, far more than what has been taken in, and set aside from the fact that they might be negated in the first place. And we've got other very needy avenues, and Congress probably wouldn't approve of it. So yeah, I have a hard time seeing these things actually coming to pass.
I think, just simply, it's a bribe. That's all it is. It's a bribe, and they want to win the midterm election. And if they're willing to bribe the population, it means they're worried about it. So regardless of whether there's going to be a payout or not, if they're worried about winning the midterm election, you can absolutely guarantee we're going to see support measures. There's going to be stimulus for the economy. There's going to be stimulus for the housing market. All of this talk about, the 50-year mortgage, talking about, portable mortgages and $2,000 checks. They're worried about the midterm election. They want to stimulate the economy. They want to make houses more affordable. So, get bullish, because they're going to spend some money.
And if we ever got the paper checks, I mean, I really don't think we will, but I can guarantee the Trump name, whether it was typed or the signature, would be at least size 24 font on that check you're getting.
I would say one thing too is I was in Singapore about a decade ago, and it was just before the election, and the government wrote checks to the entire population. They wanted to win the election. They were worried that they would lose single party rule, and they did give everybody about 1,000 Singapore dollars. And as soon as they won the election, they raised taxes and got it back.
It's going to be interesting, James. I mean, bigger picture, quibbling aside about whether we're going to get a paper check or not, I think we're probably not. But this is an administration that has been more aggressive in raising income for the government outside of collecting taxes, right? Not only the tariffs that we've had on things that are imported, you've also got royalties on what Nvidia is selling out to China that government's taking a cut of. It's now got an ownership stake in Intel and MP Materials and several other, nationally strategic companies. I mean, this is a government. I saw the same numbers that you did, the $120 billion, which is expected by the end of 2025 to be around $200 billion. That's not an insignificant amount of change. It's going to be interesting to see what they tag that for. You've got the entitlement program, Social Security, $1.6 trillion a year, Medicare and Medicaid, $1.5 trillion, and then $1 trillion a year just on the interest of the national debt, which we're trying to refinance a lot of that right now. But $200 billion, it'll be interesting to see. I haven't seen that earmarked yet on how that's going to be budgeted by the government now they've actually collected some money from the tariffs.
Yep. Well, speaking of macro kind of stuff, as I share another slide. So, Owen, one thing you pointed out is the movement in the U.S. dollar recently. This is 6 months. This is 1 month, 5 days. What are you telling your subscribers is going on? What's your view on our money?
Well, I think that the dollar is in a secular downtrend. And I think that the dollar index peaked in 2022. And I don't think it's going to
Mhm.
bottom until about 2030. But in between then and now, we're going to see a lot of variability. And the dollar index got all the way up to 100. And that is 100% on the back of the expectation they will not cut interest rates. That's the only reason the dollar is rallying. If they do continue to cut interest rates, it is going down. All of these problems we're talking about with national debt, Medicare, Social Security, massive stimulus packages. The thing is, we've been running a pro-cyclical macro policy for a decade. Normally, when you've got a big economic expansion, you're supposed to raise taxes. You're supposed to raise some cash so that you have a war chest for when things get negative. We don't have any war chest. We're running massive deficits and 100% betting the entire economy on the success of the AI boom. So hopefully it all works. But the hedge is that the dollar is going to be depreciated over time. And, anytime there's going to be a problem, they're just going to print more money. And there's the possibility that they're going to have to intervene if bond yields actually were to go up. And that would be yield curve control. And that is just a big, big sign to the entire world that they are going to depreciate the currency.
Why actually solve problems when you can leave them for the next guy, right?
Absolutely. Or make them somebody else's problem.
Yeah, even better, even better. Then you got a bad guy. Speaking of problems that may be less of a problem, Owen, you mentioned the stock market may be predicting peace in Ukraine. And I want to bring up, this is as of yesterday, so maybe it's just a wee bit different today, but I don't think very much. These are the Ukraine ceasefire odds in 2025 Polymarket. Still not very high, but I was looking, let me see if I got it up here. The Global X Defense Tech ETF, SHLD is the ticker, down 4% in the last month. The iShares Defense Industrials Active ETF, IDEF is the ticker, down 5% in the last month. Meanwhile, the last month, the S&P is up 0.6%. So in other words, the defense stock ETFs are actually going down quite a bit. In the past month, that's pretty big relative movement relative to the S&P, which is up slightly. So do you think the defense stocks are telling us something that may actually come to fruition?
I think it's quite possible, because you got to think that those defense stocks did fantastically well because there was just unlimited demand for just armaments going into Ukraine to fight Russia. Now, those stocks, a lot of those European stocks in particular, like BAE Systems and Rheinmetall, they haven't gone up all year. They've just been going sideways. So maybe we could argue that it's because a lot of the armaments are now coming, that they're being sold from the US into Ukraine, and the Europeans are paying for that. But a lot of the US stocks haven't gone up much either. So if you're not seeing a big boom in armaments while there's a war going on, well, that usually means there's less demand. And if there's less demand, well, maybe those prices are starting to suggest that there isn't going to be as much urgency. Now, I think that there's still going to be a lot of rebuilding of manufacturing capacity. There's going to be a big buildup of arms to prevent or to be a credible defense against a future invasion. But you lose the urgency if there's a ceasefire. And that would be really negative for those stocks. But also, it would be potentially very bullish for Europe.
And just good for the world, hopefully, overall. Assuming the terms are good. I guess it all depends on what the terms are. But all
Well,
else equal, we'd rather have less war than more war.
actually don't think the terms matter. They matter to Ukraine. Obviously, they matter to Ukraine. They matter to Europe. But a ceasefire, that would be negative for oil. That would be significantly deflationary.
Yep.
When we're away, we're not in the war. Obviously the terms are very material for anyone who's there, but from the perspective of the global market, they don't really matter that much.
Fair. All right. So shifting to, I guess, happier stuff. Got two fun stories. The first is West Virginia. Let me just share this here. So, State Senator from Chris Rose from West Virginia has invited 27 Virginia counties and 3 Maryland counties that, quote, seem to share West Virginia's values to join it. Now, I'm not a state or local politicians politics legal scholar, but it does seem weird. Yeah, due to overwhelming interest and support, I'm thrilled to announce we've expanded our Senate resolution, inviting even more Virginia countries, blah, 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 says West Virginia State Senator Chris Rose. So I don't know what the odds of this happening are. Just curious, though, if you guys could make any changes to any U.S. state boundaries. And I'm saying this because as Texans, I mean, if there's any state that has almost been its own nation, I think more than once, it's Texas. Would you make any changes?
Yes, James. We would annex the original Louisiana Purchase and make that Texas, previously known as the Midwest United States, now known as Texas.
The new Texas.
Yep, that's right.
Yeah. And you know, a lot of people in Texas, they would love to have the holiday homes that they own in Colorado be actually part of Texas.
Yeah, that would be wonderful.
That would help with taxes. Yeah, definitely help with taxes. I would say as a Virginian, Northern Virginia, where I live, it's really kind of its own state in a socioeconomic sense. And there's good and bad to this, but the rest of Virginia, you go about an hour and a half south of here, like you're in the South, like they have Waffle House and it's just accents and it's a totally different state. Like we're more similar to people from Waffle House. Not that bad. I may have eaten there, but it's just.
I love the way you say
DC.
The South with Waffle House.
The South.
Yeah. You know, it's very hard to not be in the South if you have a Waffle. There may be some like scattered about here and there, but to me it's a marker of the South. I guess maybe I'm wrong, but when you go down south of 95,
American culture right there, James. You know, you gotta love Waffle House if you're an American.
You can stuff yourself for like $8 or $9. It's really amazing.
Almost as good as the Golden Corral.
What I love about Waffle House is the FEMA indicator. You know that if Waffle House closes down, then you really have a problem. So
that's very true. Yeah.
What we should really do is just outsource FEMA to Waffle House.
Yeah.
And that would solve a lot of problems.
When I was hunting a few hours south of here a few weeks ago, the only place to eat at like 4 a.m. before I was out was Waffle House. So I had it recently. It didn't feel great about it, but it was okay enough, you know. So and I only paid $8, so can't beat that. All right, so second fun story in K-pop news. Some of us were talking about, Analyst Shaoping and I were talking about this New Jeans contract dispute. So New Jeans is, I think, the second most popular K-pop group behind Blackpink, the only other one to reach the Billboard 200 charts, in terms of gone mainstream in Western markets. There's a big contract dispute. I think they started high school kids. Now they're like, 17, 18, 19, 20, a little bit older now, but a very popular group. They tried to get out of a contract. It didn't work. So now they're back with their main label. But kind of in discussing some K-pop topics, I came to find out that all of us are, to some degree, K-pop fans. Simon, it sounds like you're a fan of K-pop Demon Hunters. It's a very popular show, and Owen has actually been to a K-pop concert. Owen, let me just ask you, what was that like?
Well, like I brought my daughter to a Twice concert.
Is that true? Is that you didn't just go yourself?
Oh no, that is true.
You can tell.
I do not fall in the wind. I'm going to be very clear. I do not fall into that mold. Okay, that is a very different mold of the kind of person that I am. All right. I thought that being totally objective, I think that Twice have done a great job in building their brand, and they're kind of cycling through.
Yep.
The very K-pop thing is to highlight, each individual member and give them their own individual time, which also gives them the opportunity to rest in between performances. Like that is very, I think, idiosyncratic of the way that the K-pop genre works. So that's
this is the group here. I see. So it's a more democratic K-pop than some of the other K-pop groups. Is that accurate to say?
Well, all the K-pop do that. Because what they then do is they get to appeal to different genres of music, and then they get to be able to market into different fan groups. Because they're using each individual member to promote into a different fan group. So
interesting. So it's kind of like the brand house versus house of brands kind of dichotomy.
And that's all of the K-pop groups do that.
Wow, wow. What do you guys think about so just if we look at K-pop from a 50,000-foot view, and maybe we can do our own deep dive video on this later on. Uh, the first thing that strikes me as a Westerner is this notion of sort of manufactured music. So the stereotypical musician in Western culture is, somebody with a guy or girl with a passion, and he's got to get the emotion out. It seems like in K-pop, it's kind of the equivalent of like a Backstreet Boys or an NSYNC boy band that was just kind of, these people look cute together, let's put them together. And of course, in Korea, they've really taken it to the next level with these training academies. Does that take the soul away from this, or maybe not?
I'll jump in on this, James, because musicians are talented, right? To even make it in the music industry, you've got to be a good singer, great musician, whatever. Is this, the industry is going to find talent, but music industry as a whole has always done this, whether it's K-pop or anything else. Michael Jackson was 6 years old when he joined the Jackson 5, right, in the middle of Indiana, and then we know that his career, was thousands, if not millions, of people supporting him, going out and doing tours and doing albums, and just the music industry. I think this is the next evolution of it, especially overseas. Great to see it catching on.
Fair point. It's probably a false dichotomy then between the soulful artist and the manufactured. I mean, there may be some elements of that, but it's not really, there are a lot of talented people. The supply of talented artists is probably so great that even if you assemble them together, like, you're still assembling talented artist pieces.
But I do agree with what Owen said about kind of manufacturing with different pieces that would, appeal to different groups. That, they have their favorite Backstreet Boy, they have their favorite member of NSYNC, they have their favorite K-pop group. I mean, that's by design as they start these bands from day one.
Well, like Spice Girl, like in the old days, the Beatles, if you look at them play, they all look the same, kind of uniform dress, right? Then like Spice Girls, and when was it? The late 90s, or mid 90s? 30 years ago now. Wow. They had very distinct personalities, and you knew which, and there were fans of certain individual Spice Girls. Don't ask me how I know all this, but I get your point. Yeah. Oh, and so closing question to you, just theoretically, would you go to a K-pop concert with just me and Simon?
Depends if you're paying.
I think it's better if three guys went together. One like Gen X guy going alone may be a little bit weird, but I think three of us together.
I saw this fantastic video of a girl who was doing like a K-pop concert, and she goes, "Oh, can I get a shout out from all the kids in the concert?" And there was silence. "Can I get a shout out from all the middle schoolers in the audience?" Silence. And she keeps going up and up, and she says, "Can I get a call out from all the guys over 20 in the audience?" And it was uproarious. So they kind of know who their market is, But, the thing that I think is sort of interesting about this whole story about the K-pop thing and, rebelling against their label, if you are not writing your own music, you do not have power. And the artists that write their own music and then also perform, they have all the power in the music industry. So effectively, it's really about, if you are a truly creative person, performance is a commodity. Creativity is something that is elusive. And if those girls were also writing their own music and could start their own label, then they would have a much better chance of getting out from under the patriarchy of that much bigger company.
Yep. I'm speaking in ignorance, but I'm guessing 80% of K-pop artists do not write, male or female, do not write their own music. It's a wild guess. Yep. Fair point. All right. So let us bring on analyst Shaoping Wang. First of all, what do you think of our K-pop discussion, Shaoping? Like, how would you rate it?
Well, it's funny. Like, 8 out of 10.
8 out of 10. Okay, I'm not sure what standard, like, but for guys wearing jackets talking about K-pop, that sounds like a decent number.
Yeah.
Do you think my number is accurate? 80% of them don't write their own music?
Well, yeah. And some of the group members, they did write, but really few of them. Probably like 90% of them don't write their own music.
Got it. Who's your favorite K-pop artist or group?
Right now, I don't have any, actually.
Come
Yeah,
on,
while I used to be really into K-pop.
Who's your favorite Blackpink member?
Rose?
Rose, okay.
Yeah, she writes her own song, right?
Really? I didn't know that.
Oh, she wrote a lot.
Rose did a sleep story on the Calm app. Those things you listen to if you have insomnia like I do. I didn't sound like she wrote it. It was a very long poem, but
Oh.
I heard it a couple of years ago. Anyway, okay, so let us shift from K-pop to stocks you can buy. So why don't we flip the order? So Owen, what stock are you looking at this week? And again, these are not formal recommendations, and they're not necessarily stocks that we like. They could just be stocks or investment ideas that we're looking at for good or bad reasons.
Well, I really was looking at this K-pop whole issue, and I thought it was very interesting what happened with SM Entertainment because
Mhm.
they took a huge dive this week. That stock really pulled back, and now they've had to sign a deal. They really have to kind of get their act together now, and they really need to get back into their major growth market, which is China.
Mhm.
K-pop heavily relies on the Chinese market. So what I would think is that the big beneficiary of this is going to be Tencent Music.
Mhm.
They have got a sweetheart deal now from SM Entertainment, and they are going to benefit enormously from a really favorable deal to promote K-pop back into the Chinese market. So I think that Tencent Media, or Tencent Entertainment, which has pulled back quite sharply over the last maybe 3 or 4 months, it's right at the place where it's probably going to be an attractive buy right now.
Interesting. Yeah, the 1 year chart was up. I just showed that a minute ago, but up over 1 year. But over the past 6 months, it's gone clearly down. And they've gotten some, like I know Red Velvet. They've gotten some names here. I can't say that I know all of these, but it's definitely a big label. So
Yeah,
SM Entertainment, and the ticker on the Korean, it's a number. Korean stock market is 041510. All
but
right,
sure I would
Simon, what
buy the Tencent Media.
10-cent media also? Okay.
Yeah, that's the stock to buy.
Okay, got it. You think it's going to be a favorable? What is the Tencent Media? Is it
Tencent Entertainment,
it's a
TME.
music stock, right? Yeah, yeah. This one here, yeah. TME, Tencent Music Entertainment. Uh, oh, look at that! Quite a rise. Last couple months have not been that great, but 1 year up about 60% in the past year. So TME, Tencent Music Entertainment, market cap of $30 billion. So Simon, what have you got on your radar this week?
James, I'm going to go with DraftKings. DKNG is the ticker for that one. This is an oligopoly in online sports betting. That and FanDuel, it's owned by Flutter Entertainment in your home country of Ireland there, Owen.
Right.
It kind of have been this oligopoly, 80% plus market share in the United States for online spending. You can bet on, the outcomes of games, how many passing yards Patrick Mahomes is going to throw in a football game, things like this. But I saw, James, that you were even in the browsing of your web browser here, pulling up some Polymarket graphs, which is kind of the disruptor of this industry now, which is now you don't have the house raking 10% like you typically have done at casinos or on sports betting for most bets of the rake of the total take that's out there. You've now got kind of these kind of open sources available everywhere. This is a federal program that you can now have Polymarkets prediction markets that will allow you to basically bet on anything. It started out with political elections, then it went into sports betting, and now you can even bet on, how many times is Trump going to say tariff on the next presentation that he gives. I mean, almost anything you want to make a bet on, you can now do this. And it's just regulated in a completely different way. And DraftKings is kind of in a reactionary position from this because they've enjoyed raking in the profits for so many years. And now they're saying, hey, we're going to offer our own prediction markets product. We've doubled our buyback authorization because the stock has gone down so aggressively. It's going to be interesting to see how or if they're able to pivot as this entire industry is evolving right now.
So down 30% over the past year, roughly. It sounds like, Simon, the prediction market stuff is kind of like either incipient or it's very, very small at this point. It's not a big part of the revenue yet, but it's potentially their future. Is that what you're saying?
At first, I had considered it to be a competitive threat because you were thinking that companies like, Kalshi or anyone that's really kind of focused native to predictive markets would woo over the customers from DraftKings. They'd start using the platform that was more universally available and bet on more things rather than just what DraftKings had offered. But I'm starting to change my opinion on this, James. I think that actually it's going to be an incremental opportunity because DraftKings has had to abide by the state rules on gaming and betting and gambling. There was only 38 states even allowed it in the United States for a while. Now all of a sudden predictive markets are open for everyone. Of course, DraftKings can compete in this new market as well. It could actually be a blessing in disguise. So they're going to have to give up a little bit of their existing oligopoly profits, but it could be an even bigger opportunity going forward.
The prediction market stuff is very interesting. So interesting that we might do our own special segment on it. In fact, it's much less regulated than the state-by-state sportsbook betting market. The insider trading rules, I think, are quite different, if not non-existent. So it's much harder to get busted doing insider trading. I have some philosophical conundrums in my mind about like how good it is for society, in the sense that it's not like a company doing secondary offerings or IPOs where that money actually goes to a company. Good companies get rewarded, bad companies get punished. You don't really have that same dynamic. It's just a side bet between two people looking at the same event, right? It's like turning investing into a nation of sports betting, sports bettors. I got to think through it more. It's very interesting though. But as a business, as an investment opportunity, I'm totally behind you. I think it's the right move. If I'm DraftKings, that's exactly what I'm doing, because that's where the puck is going.
This is a huge industry. I look forward to the opportunity to talk even more in depth with you in the future, James.
Looking forward to it. Shaoping, special guest of sorts. I mean, you're on this live stream weekly, but today you want to share a stock idea. What is your idea?
So I'm gonna talk about Diageo.
Okay.
So this is a company behind Johnny Walker, Guinness, like over 200 premium brands. They sold in 180 countries. Basically, half of the bottles you see behind any bar anywhere in the world. So it is the world's largest premium spirit company, and it's been a long-term winner for decades. But this past year, the stock fell about like 25% probably, and while the S&P 500 went up like 15%. So we're talking about roughly 40 points of underperformance right now. So what happened actually? Did everyone suddenly just stop drinking? Not exactly. There are very like cyclical reasons. So the first one is that the consumers in places like Latin America, Africa, and parts of Asia pull back a bit. These are premium brands, and people just don't quit them forever. They just pause during tougher times. And
emerging markets were a big part of their business, where it's prestigious to give gifts of expensive alcohol, basically, right?
Yeah. And the second one is the currency, because they are operating in 180 countries. Diageo sells like everywhere, but when the dollar is strong, the report numbers looks weaker than they really are. And the third one is Diageo's margins and debt aren't really back to their ideal levels yet. They are working on it, but the markets want some proof. But but here's what's important. None of these are really like structural problems. They are just some cycle issues. They don't change what Diageo really is. And as for the like alcohol market, the whole world is like, tend to drink better, but not more. The premium and super premium spirits segment is expected to grow from about like $467 million to over $1.1 trillion by 2035.
And that's the money shot right there, right? Is the super premium. That's what they do. So basically saying it's down, the headwinds are there, but they're temporary. They're not going to last. And over the long run, expensive booze will pay off. Maybe the wild card is the GLP-1 agonist drugs, right? If they reduce alcohol, I would guess a small percent of people buy a large amount of alcohol. But again, that's probably less likely to affect a super premium seller like Diageo as it is somebody making Pabst Blue Ribbon or Budweiser or some. I mean, if you're a constant, alcoholic, unless you got a lot of money, you're probably drinking cheap swill. So, Anyway, Diageo, interesting stock. I like it. It was one of my recommendations a long time ago at Motley Fool in my dividend investing service as well. So I am going to go with Google, or Alphabet, actually. Kind of maybe predictable, but it's good enough for Warren Buffett, which Berkshire Hathaway made it about their 10th largest public equity position. ROIC, return on invested capital, typically 20 to 30%. That's very high. I like that. I'm a sucker for high ROIC. AI is not killing Google search. In fact, if you type a search query into Google, at least on my browser, the first thing that pops up is a Google AI summary. So I think Google is just as capable as anyone else in this space. And another thing that I don't like, but I like, is big tech. Come on, it's kind of unassailable. Recently, we had this U.S. district judge in DC saying Meta's purchase of Instagram and WhatsApp did not make it a monopoly. Ironically, at the time, it kind of did, but he's saying that now that there's so much other competition, it's no longer a monopoly. Weird logic, but I guess it's true. Meta is the lobbying king of big tech. They spend about $20 million a year in lobbying. The first 9 months of this year, they spent $20 million. Google has spent $12.2 million. I don't like this, but big tech has a huge lobby. There have been numerous congressional hearings about monopoly power, about is it good for kids, about blah, 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 blah. But there has been almost no legislation actually passed that restricts big tech. So do I necessarily like big tech for society? I think they have too much power, but I think they're going to continue to have too much power. I think as a stock, Alphabet is as good as any. So, okay, that's my jaded pitch. Guys, it is always fun to get together and do this. And I hope those watching get value, not just from the stock ideas, but from the insights, the occasional bad jokes, and just the overall commentary that we deliver. So Shaoping Huang, Eoin Treacy, Simon Erickson, guys, thank you so much. We're going to be off next week in terms of the actual show. Back the week after Thanksgiving. We want to wish everybody watching a happy Thanksgiving in advance, and we'll see you next time. Thanks, guys.
Happy Thanksgiving.
Thank you.